The patterns that we are going to talk about are the hanging man, bearish piercing, bearish engulfing, evening star, and bearish harami. So now we start our lecture with a hanging man pattern. This is a pattern which is a single candlestick pattern. The body of the pattern is very small and the lower wick is greater than twice the size of the body. There should not be any upper wick or a very small upper wick. The body can be green in color or can be red in color, but red colored bodies is a better indication of reversal. Now, how this type of formations occur and how this candlestick actually gets formed. The prices are in an uptrend, indicating that the bulls are in control of the market. On the day when this candlestick or hanging man is formed, the prices open above the previous close, indicating a bullish stance by buyers. But soon after, the bears come into picture and starts driving the prices downward, creating a new low. But as the markets come to close, the bulls again come into the picture, driving the prices up, and they end the markets very close to the price at which it opened, thus forming a very small body. The color of the body can be green or can be red. Since the bears have started coming into picture and they were able to drive the prices way low, then the bulls have become a bit cautious or nervous, and if after the day on which the hammer is formed, if there is a formation of a red candle, it clearly indicates that the bears have gained control of the markets and the prices will start going down from thereafter. Hence, if you are having any position, any long position, then you should book profit, or in case you are not having any position, you can sell that particular asset. There are some conditions which make this type of pattern a strong reversal pattern. First, if the length of the lower wick is big, then the chances of reversal are very strong. If the volume traded on the day of hanging man formation is high, then the chances of reversal is higher. Third, if the prices gap open above the previous close, then the chances of reversal is very high. Now let's look this pattern on actual graph of some company. Let's take an example of some companies and how the hanging formation actually looks like and how the pattern gets formed. The first example is of a company named NMDC. As you can clearly see that the prices are slowly moving upward, indicating a bullish stance by the buyers. But you can see that there is a formation of hanging man which is encircled for your understanding. Thereafter, the prices opened lower, indicating that the bears have come into the market and they have started driving the prices downward. Thereafter, the prices are continuously going downward, and this is a great way to earn profits if you shorted this particular stock when the hanging man was formed. We can take another example for better understanding. Let's take an example of the company named L&T. Prices are continuously moving upward. There is a formation of hanging man which is clearly seen in the graph, and thereafter we have the next candle which is again a red candle, indicating that the bears are in control of the market, and thereafter it fell heavily. So as you can easily see how much profit you can earn by these type of pattern formation. So I would like everyone to see as many charts as possible to spot this pattern and get comfortable in spotting this type of patterns to really start earning well from the markets. Now let's talk about another important pattern called as a shooting star formation. This is a single candlestick pattern. In this case, the body is small in size and you have an upper wick which is greater than the size, which is more than twice the size of the body. There should not be any lower wick. The color of the candle can be green or red, but a red candlestick is a better confirmation indicating candle. Now in this case, since it is a bearish reversal pattern, the prices are continuously moving in an upward direction. The bulls are in control of the markets, and on the day on which this type of candlestick is formed, the markets open above the previous candle, indicating that the bulls are in control of the market. These bulls increased the prices to a high point, but when the markets were coming to a close, the bears come into picture, they start driving the prices down, and they were able to close the market very close to the price at which it opened, due to which the body of the candle formation is quite small. Now as you can see that after the bears have taken control of the market, they were able to stop the bulls from keeping the prices in an upward direction. If after this day if the prices end in red or we have a red candlestick formation, then it is a clear-cut indication the prices will start going downward. So you need to take a short call, or if you are long on a stock, just book profit or loss whatever is occurring in that particular asset or stock. Now there are some indications which make it a better reversal formation pattern. First, if the body is red in color, then the chances of reversal are higher. If the volume traded on this particular day is high, then the chances are higher of reversal. And if the upper wick is very long, then the chances are very strong for a reversal pattern to take place. To understand the formation of shooting star, let's take an example of the company named Bharti Airtel, which deals in telecommunication sector. The prices are continuously moving in an upward direction as visible on the charts. There is a formation of a shooting star which is encircled for your understanding. Whenever there is a formation of a shooting star, it indicates that now the bears are coming into the market. Thereafter, on the first confirmation day, there is a formation of a red candle indicating that bears are now in a very strong position to take control of the market. Thereafter, the prices have gone in a downward direction. So when you see this type of pattern, you need to take a short trade in that particular company or an asset or equity, whatever it is. Let's take an example of one more company to understand it better. The second company that we are going to see is Tata ELXI. Tata ELXI. In this case, the prices are moving in an upward direction, indicating bulls are in control of the market. At the end of an uptrend, we can see that there is a formation of shooting star. Thereafter, there is a formation of a red candle indicating that the bears are in control of the market, and the confirmation candle is indicating that the prices are likely to move in downward direction. And as can be seen that the prices have fallen heavily after the formation of this candle. So once you see this type of candlestick, kindly trade by selling the stock. Now we are going to talk about another candlestick pattern called as bearish engulfing pattern. This is a two candlestick pattern, that is, two candlesticks are required for this pattern to form. We will be representing the two candles as candle number 1 and candle number 2 for easy understanding of the pattern. This is formed at the end of an uptrend, so the prices are continuously moving in an upward direction, indicating that the market is bullish and the buyers are continuously buying the stock or particular asset. On day 1, there is a formation of green candlestick indicating the market is still bullish, so a green candle gets formed. On day 2, the market opens above the previous green candle's close and it closes below the opening price of the green candle, indicating a formation of a red candle which completely engulfs the body of the previous green candle. Since this type of candlestick is formed, it clearly indicates that the bears are aggressive in the market and they are able to drive the prices downwards. After the formation of an engulfing pattern, if the next day after the candle 2 is a red candle, it clearly indicates that the bears have taken control over the market and the prices should start to go downward from there on. So the third candle that we are talking about after the formation of second candle is basically a confirmation candle which tells you yes whether you should go in a trade or should leave that particular trade. Now there are some conditions which make this type of pattern a stronger reversal pattern. If the two candles are big in size, then it clearly indicates the chances of reversal to be stronger. Secondly, if the volume traded on either of these 2 days is huge, then also it indicates that the reversal is a stronger reversal pattern. If the red candle gaps open way above the green candle and completely engulfs it, then also it is a clear-cut indication that the reversal is going to be strong in nature. Now let's understand this pattern by actually seeing how it looks like in actual graphs. So let's take some examples to understand it better. The first company that we are going to talk about is L&T Finance. The prices are continuously moving upward. There is a formation of the first green candle, and thereafter on day 1 we have a very big red candle and engulfing entirely number of candles. So after this day we easily see there is a formation of again a red candle indicating that the bears are very aggressive in the market and the prices are continuously going downward. Let's take another example of the company named NMDC. It is continuously in an uptrend. There is a formation of a green candle indicating bullishness in the market. Thereafter, there is a very big candle formed which completely engulfs this red candle, indicating the bears have started coming into the market. Thereafter, the markets are continuously going downward. So these type of patterns give you clear-cut indications to go short and make money when the prices are falling downwards. We can take another example of a company named Torrent Pharma. In this case, I would like all of you to understand how this pattern is working. It is a clear-cut indication that the formation has happened and we have encircled it. I want you to see it and understand whether what we have discussed is what is holding in this pattern. Now we are going to talk about another important candlestick pattern called as bearish piercing pattern. This is very similar to bullish engulfing pattern, as you will see. This is a two candlestick pattern and we will be representing both the candles as candle 1 and candle 2. The prices have been continuously moving in an upward direction, indicating that the bulls are in control of the market and the prices are slowly increasing. On day 1, the candlestick, a green candlestick gets formed, clearly indicating bullishness in the market and continuation of the trend. On day 2, the markets open above the previous green candle close, indicating bullishness, but suddenly the bears come into picture and starts driving the prices below, and the prices close below the halfway mark of green candle 1. Since the bears came into picture and started to drive the prices downward, there is nervousness in the market and the bulls have started to question their move. So if after the day 2 there is a formation of a red candlestick, it is a clear-cut indication that the bears have taken control over the markets and the prices will move in downward direction from there on. That is, the chances are very high for the prices to go downwards. There are some conditions which make this type of reversal pattern a stronger reversal pattern. If the green candle or candle number 1 is very big, then the chances of reversal is high. If there is a huge volume on either of these 2 days, then also the chances of reversal are very high. If the candle number 2 or the red candle gaps way above the green candle and then closes more than 50% of the green candle, then also the reversal patterns are very high. Now, whenever we see these type of patterns, if we are long on any stock, we should book profits. And if we do not have any position into the markets, then we need to take a short position on that particular day after there is a confirmation by the third candle. Now let's see this pattern in action by actually taking the graphs of some companies. Now let's take an example of a company named MFSL to understand what is a bearish piercing pattern. As the name suggests, piercing means that it is like going within that particular candle. So in case of a bearish reversal pattern, the prices are continuously moving in an upward direction as visible on the charts. There is a formation of a green candle and thereafter there is a formation of a red candle. So it is a two candlestick pattern. The red candle opens above the close price of the green candle and thereafter it goes below the halfway mark of the green candle, indicating that the piercing has taken place. Whenever the red candle is piercing, it is indicating that now bears are taking control of the market. And on the confirmation day, you can see that there is a formation of a red candle, indicating that the bears are now in control of the market and the prices should go in downward direction from there on. As can be easily seen on the charts, the prices from there on have started to go in downward direction. Let's take one more example to understand it better. And the name of the company in this case is Muthoot Finance. The prices are moving in an upward direction on the charts. There is a formation of a piercing pattern as is visible, and I don't need to explain now because you are very comfortable seeing the pattern itself, what type of pattern it is. Thereafter, you see that the prices are going downward and you can trade this type of setting by shorting that particular stock whenever we are seeing this type of formation. Now we are going to talk about an important candlestick pattern called as a bearish HARAMI pattern. This is a two candlestick pattern, that is, we have candle 1 and candle 2. The markets are in an uptrend, so the bulls are in control of the market. The prices are gradually moving up. On day 1 of the candle, the candlestick formation is a green candlestick formation, indicating that the markets closed higher and it is in confirmation with the overall trend of the market. But on day 2, suddenly the bears come into picture and the markets open below the close price of the first candle and it closes above the open price of the green candle. So as you can see in the picture, this red candle is completely engulfed by green candle 1. This type of formation is called as a HARAMI formation. Since the market was moving up, the tone of the market was bullish. But on day 2, when suddenly the bears came into picture, they were able to hold the prices, and prices closed below the opening price, indicating that the bears are in a way in some control of the markets. If after this candle formation on day 2, the markets you again see a red candle, then it is a clear-cut indication that the bears have taken control of the market and the prices are very likely to go down from there on. Some of the conditions make this type of candlestick formation a stronger reversal pattern. First, if the volume traded on any of these today is high, then the chances of reversal are very high. Second, if the green candle is long in length, then the chances are high. Now, whenever this type of candlestick formation takes place, it is important that if we are long in a stock, then we need to book profit or loss and get out of the trade. If you do not have any position, then it is very important you take a short trade and make money. So now we are very comfortable in spotting different patterns that we see on the charts, and practices, the more and more you practice, the better it is. Now let's see these patterns on actual charts. The first example that we are going to take for understanding bearish HARAMI reversal pattern is of the company named Just Dial. As you can see, it is a bearish reversal pattern, so the prices must be moving in an upward direction before the formation of this pattern. As clearly visible on the chart, the prices are moving in an upward direction, indicating that the bulls are in control of the market. At the end of an uptrend, you can see that there is a formation of 2 candles. The first candle is a green candle and the second one is a red candle, the body of which is entirely within the body of the green candle. This type of formation is known as a bearish HARAMI formation, and it resembles a pregnant woman, and this is what is called in Japanese terms. So whenever this type of formation occurs, if on the confirmation day there is a formation of a red candle, it clearly indicates that the bears have come into the market and the prices are very likely to go in the downward direction. So you should take a sell trade. As we can clearly see on the charts, which is encircled, the prices after the formation of this candlestick pattern have started to move in downward direction. So this is how we are going to trade a bearish HARAMI reversal formation. Now let's take one more example to understand it better. In this case, the name of the company is Tata Motors. This is a company which manufactures different vehicles in India, and it is an owner of Jaguar too, so we are proud of it. So in this, you can see that the prices are moving in an upward direction. There is a formation of a bearish HARAMI pattern wherein it is a 2 candlestick pattern, and you can see on the charts. The first is a green candle, the second one is a red candle, and the body is entirely within the green candle. Thereafter, the confirmation candle is also a red candle, and thereafter the prices have continuously moved in downward direction. As you can easily see that the amount of profits that you can make whenever this pattern is there is high in this case. So whenever you see this type of pattern, kindly trade it. Get comfortable by taking a lot of examples, practice as much as you can. Now we are going to talk about another important candlestick pattern, and whenever you see this type of pattern, you should definitely trade this pattern. This is known as an evening star. The prices are moving in an upward direction, indicating bullishness in the market. It is a 3 candlestick pattern, so we will be representing it as candle 1, candle 2 and candle 3. The first candle that gets formed is a big green candle, indicating that the market is strongly bullish. Buyers are in strong control of the markets, and it closed way above the price at which it opened. On day 2, there is a formation of a candlestick, an indecisive candlestick. That is, the body is very small, indicating a tug of war between the bulls and the bears. And on day 3, if we have a formation of a red candlestick which closes more than 50% mark of the candle 1, then it is an indication that the bears are taking control of the markets. If after the formation of this candlestick, the next candlestick is red in color, then it is a clear-cut indication that the bears have taken control over the markets, and the prices in most likely cases will start going downwards. So there are some conditions which make this type of pattern a strong reversal pattern. First, If the length of the first green candle is very big, then the chances of reversal are very high. If the indecisive candle gaps open from candle 1, then the chances are very high. And thirdly, if the third red candle also gaps down open and is also big in length, then the chances of reversal are very high. If the volume traded on either of these 3 days is big, then also the chances of reversals are very high. So whenever you are getting this type of pattern, if you are long on a pattern, you need to get out of the pattern or you need to book profits. Secondly, if you do not have any position, you can short that particular asset and earn by falling prices. So now let's take example of some companies to see how this pattern actually works. Now we are going to take an example of the company to understand what is an evening star pattern and how it actually looks like. The name of the company is State Bank of India, which is a banking company. It is a 3 candlestick pattern which consists of 3 candles, 1, 2 and 3, as can be seen on the charts. The prices are in an upward direction, indicating that the bulls are in control of the markets. There is a formation of a green candle, indicating that the first candle is indicating a bullish momentum in the market. The second candle is a doji candle, indicating that now there is indecisiveness in the market and the bulls and the bears are fighting the market now. If after this there is a formation of a red candle, a big red candle, indicates that the bears are now taking control of the markets and the prices are very likely to move in a downward direction. Whenever you are seeing these type of formation, which is a 3 candlestick formation, they are very strong reversal patterns, so you should directly trade these type of pattern. In this case, as we can see that we don't need to even wait for the confirmation candle. In this case, despite the confirmation candle being a small green candle, we are going to take these type of trades. And as we can see that after the first confirmation candle, the prices have fallen down heavily. So in this case, whenever you are seeing this pattern, you need to sell the stock. You can now easily spot these type of patterns. At this place, I will be ending my lectures, and now we will be shifting with the neutral patterns, which will consist of doji and how we are going to trade dojis in the market.